you're a real estate agent today and you're listening to this podcast and you say, gosh, it's been pretty tough out there and there's not a lot of business, I would sure like to supplement that. How do I get my license and how do I get started?
Knowing the mortgage side of it is crucial. It's just such low-hanging fruit. I mean, it really is. As a real estate agent, why wouldn't you want to do that?
This leads us to you run a branch and you have a team.
Yeah.
And a couple of people on your team, they're real estate agents. You can do real estate through one company and you can do mortgage through another. And we're equipped to do that. And you're specifically equipped for it because you're not only a branch manager, but you also mentor people. How much money could a mortgage broker make annually? What would your answer be?
In life, there's a blueprint for everything. There's no need to start over. Hear from industry leaders, those at the top of their fitness journey, and real estate gurus. They tell you exactly how they did it. All you have to do is listen, learn, and execute. This is The Blueprint with Brad Rice.
Here we go again. We're back on The Blueprint with Brad Rice, and today we have another loan officer spotlight. I am thrilled to have today somebody who's actually local to us here in the office, so I get to see him quite a bit. And I've been bugging him for quite some time to jump on the podcast with me because he sees people coming in and out of here, but he's been so shy. Anyhow, I finally got him. We have Shadi Sawalha with us today, and Shadi brings a ton of experience in mortgages. He's been doing this his entire career. He's been on both sides of the business. He's worked for a bank. He's worked for a broker. He knows everything from the independents all the way through working under the umbrella of a bank and the restrictions you have. So we're going to get into a lot of that. We're going to get into some specifics on qualifying for a loan, maybe the types of people that are out there today that want to get in the loan business. Anyway, I'm super excited to have this chat with you. Thanks for joining me today, Shadi.
I'm glad to be here, Brad, since you mentioned I sit right outside this door.
Yes, you finally made your way in.
I snuck in.
He came in, he says, oh, I've never seen this place before. Just kidding. Anyhow, cool. Well, look, I would like to start because I think most of the people that work with you, whether it's referral partners like real estate agents or, your clients, they really don't know a lot about you, about Shadi. Tell us a little bit about where you were raised, what that was like, and how you got into the mortgage business to begin with.
Okay, this is, I'll try not to make this too long-winded. So born in Jordan, Amman, Jordan. When I was 5 years old, my family, older brother, younger sister, mom, dad, we had family in Chicago, and then my aunt, my mom's sister, lived in Simi Valley. We came out here for vacation, right? Spent time in Chicago, came to Simi, and never went back. That was it. My dad made the decision, I'm not going back, and it became...
What year was that?
82.
Okay.
So that's kind of the start. And then my dad's a grinder, Brad. I don't know if I talked to you a lot about my dad, but
I think you mentioned he owned a gas station.
He does. Yeah, he did. He does. Yes.
Okay.
And so when my father was 15 years old, his dad passed away, and he became the caretaker for three of his brothers and his sister. He would actually carry tools for contractors or guys, whatever, and they would pay him like a nickel a day. Okay. He eventually got into the insurance business and did very well for himself, became like vice president of this large insurance company. And so we had when we made the move over here, he did have the means to, he wanted to, I don't know why he wanted to buy a gas station. That's the only, I have no idea why. I've never really understood it. But within the first year being here, again, language barrier, don't know anything, bought the gas station here in Simi, and we've had it for over 40 something years.
Yeah.
I learned, so a lot of his grind, I take directly from him.
Is he still working at the station? Like he goes there?
He goes there. He doesn't have the patience for it anymore. You know what I mean? People complain, gas prices are so high. And he's like, don't shoot the messenger. You know what I mean? Blame the oil companies. But he goes in and he just grabs the paperwork, He's sharp as a tack at 80. And that's what kind of keeps his brain going. Yeah.
All right, awesome. So obviously you've been local for a long time.
Yeah.
Went to local high school.
Went to Grace Brethren, graduated from Grace Brethren. That's where I met my wife in high school. And then from Grace, went to Cal Lutheran, graduated from there. And then I wanted to be a stockbroker. The only reason why I wanted to be a stockbroker is my dad was buying and selling stocks back in the day. My cousin was a stockbroker. And every morning I'd come into their room and he'd have CNBC on. And it was kind of just it was fascinating to me. And the first stock that I bought was Nike. And the second stock that I bought was Dish Networks. And I made 30 grand. And that was to fund some of the down payment for our house and Brandy's ring before we got married. Anyways, I got my Series 7 license, passed it for the first time by 1 point. So this is Merrill Lynch in Westlake Village. And if you don't pass this test, there's a box sitting on. So they bring you in like as an intern.
Yeah.
Right? As you're studying for your test. And again, if you don't pass, you're gone.
Yeah.
So I couldn't, and it's one of those things where you hit the button and it's just like red or green, right? Doesn't,
You mean when you land at the airport in Mexico and it's whether they're going to inspect your suitcase or not, thing?
Yeah.
Okay.
So, I mean, my God.
For those of you that don't know what we're talking about with that, if you travel, and I'm sure there's other countries, but if you travel and you fly into Mexico and you go out, you get out of the, kind of immigration area.
Yes.
And you want to get into the, the country, you walk by and you hit this button, and that button either comes up red or green.
Yes.
If it's green, you walk through. If it's red and it's randomized, maybe, who knows, then they inspect your suitcase. But it's like right in front of you, and they're just rifle through your suitcase, so you don't want it to come up with no.
Listen, if anybody has been has been a financial advisor or a stockbroker, whatever you want to call it, and you had to take the Series 7 test, it is so intense. Months of studying, it's just wild. Yeah. It's insane. So I came back to Merrill, and Matt Morrison was my manager at that time. And I came and I said, hey, I passed. And he asked me, what was your score? And I went,
passing
63. And he hugged me. He goes, if you told me 99, I would have been really disappointed because you should have been an analyst. So the people who scored less are more of the, people type sales kind of thing. The higher you score, you should be in the back office doing charts,
Gotcha.
So I spent about 2 years at Merrill, and then one night I ran into my cousin's ex-husband at the time, out of all Fridays. His name was James, and I had no beef with the guy. I mean, what do I care?
You weren't married to him.
I wasn't married to him. But anyway, so we were just doing small chat, and he asked me what I was doing. I asked him what he was doing. He said he owned a mortgage broker shop. No idea what the hell that meant, right? No idea. And the conversation continued throughout that week because we exchanged numbers. And one of the questions he asked me was, Brandy and I just got married at this time. And he asked me, what did they pay you at Merrill Lynch? And I said, $35,000 a year. And I swear, he looked at me, he goes, do you want to make that per month? And I'm like, what are you talking about? Never heard of such a thing, right? Yeah. So I was like, okay, I don't even know what an interest rate is. I have no idea. You know what I mean? So I decided to leave.
By the way, if somebody today were to ask you how much money could a mortgage broker make annually, what would your answer be? Are you a tech investor looking to shape the future of real estate? HomePie is the #1 for sale by owner marketplace, and we are revolutionizing the way homes are bought and sold. I'd love to hear from you. Just email invest@homepie.com and let's chat. Now back to the show.
Honestly, it could be unlimited. I mean to be like you can easily make six figures is a no-brainer. No-brainer. All right. So seven figures is you can get there depending on the market, right? But you can consistently hit six figures, and I'm not talking like $100,000. That's minimum. I'm thinking you're like in the 200-300 on average. You could do that year in, year out.
Yeah, and that's that's a really good point, because I think when youth is going through trying to figure out what they want to do and finding their passion, and if somebody likes real estate, there's lots of different choices, things that they can do. They can get involved in flipping homes. They can get involved in selling real estate. They can get involved in investing in real estate, in short-term rentals.
Yep.
And they can get involved in mortgage.
Yeah, absolutely.
But how do they really know that's not something you learn as you're going through any sort of schooling. You have to kind of know somebody that's in mortgage or have gone through the process of getting a mortgage to have some concept as to what that is. And then the answer is like, well, how much can I make? It is unlimited.
It is unlimited. Again, because there's so many, again, like you're mentioning, so many different avenues. The thing like where, I think that if somebody was interested in real estate, knowing the mortgage side of it is crucial, because I get, like with my realtors, I talk to them we're on the phone all the time. Here's where we're at with this deal, and how do we qualify them? Here's what their credit scores are. So they're really involved, right? They're not directly involved with documenting paperwork or me getting the client like pre-approved, but they're involved like in the outside kind of thing. You know what I mean?
The results of it.
So they're involved. But so couple of points. One is if you wanted to get into real estate, you're going to be your clients might ask you stuff on the mortgage that you need to have kind of maybe a base, you know what I mean, as a real estate agent. I'm sure that they teach you that stuff. But if you really want to, if you're into the real estate and you really want to cross the path of mortgage, it is another source of income, right, that you can tap into, because you're already on the football field. You know what I'm saying?
Yeah,
Am I making any sense?
Yeah. Let me rephrase this. So, what you're saying is, if you're selling real estate, if you're a real estate agent and you're selling real estate, you already are on the periphery. You already know about mortgages.
Right.
You know the general. You know the nomenclature. You know the kind of words that we use, and loan to value and things of this nature. And it's not that big of a leap if you wanted to also do mortgages. And so this leads us to, you have a team. You run a branch and you have a team.
Yeah.
And a couple of people on your team, they're real estate agents.
Yeah.
That do mortgages on the side. And so it's not that difficult of a thing. You do have to get a different license, an endorsement to your license. But why don't you talk about the steps it takes if you're a real estate agent today and you're listening to this podcast and you say, gosh, it's been pretty tough out there and there's not a lot of business. I would sure like to supplement that with something ancillary to what I'm already doing. How do I get my license and how do I get started?
You just basically got, you have to get your MLO license, your mortgage loan originator license. Really, that's it. So what you would do, it's simple. You would take some crash course classes, right? Or you're going to take some prerequisites, right? Then you get to some pre-testing, and then you sign up for the test and you take the test. And the MLO is not a difficult test to take.
And how long would it take you from the time you decide, I want to get this license, you start doing the classes, to actually taking the test and hopefully passing it?
You could nail it if you really stuck to it, right, and did the material. I could probably say you could probably do it in 30 days.
Okay, so 30 days. So now you get your license.
Now it's not going to take you 30 days. Here's the thing where there's a time frame where you have to schedule your test, right? And then there's certain dates, and they could be, you know what I mean? Like, it's not going to be like, I want to schedule my test on Wednesday at 1 p.m. and tomorrow's Wednesday at 1 p.m. and I'm walking in. No, right? You have to
I get it. So
Yeah.
it might be 30 days to be ready for it,
Right.
but then it might be may not be a test for 2 weeks or 3
Depending
weeks,
on-
and you have to wait
exactly.
for that date.
Yeah.
But either way, let's say 30 to 60 days. Then you really don't know how to originate mortgages. So what's the next step?
So the conversations that I've had with the two agents that I work with is that I think the biggest step into coming into this business or like the advantage, right? If you were a full-time realtor, you already have your clients. You've helped them buy and sell their homes. You have a book of business already, right? To start, you can just tap right into it. I mean, you're on the pad, you're ready to take off, right?
Yeah.
That's, I think, the biggest thing is like, well, where do I start, right?
So that's the question. Where do you start?
Go in and tell all of your clients, all of your family members, everybody that you know in your network, oh, by the way, I can do your loan now too. So I can help you buy, I can help you sell.
But take a
I can
half
do-
step backwards.
Sure.
Okay. So that's how you start getting business, but you need to be with a company that supports somebody who's new, right? Who you have a mentor, you
I
have
see.
somebody that you
Okay.
that you're so you're unique in that there's not everybody that's a branch manager would bring on green people. Now, your real estate agents that are also under your branch, they're not really green, but they don't know how to originate loans. That's it takes some time and it's some experience to do that, but you mentor them.
Yeah. So yesterday I had a call with a real estate agent that's out in Orange County that she reached out through our website, and because this is at Amerifund we actually obviously we offer this for real estate agents, and she was interested in this conversation, and that was several of her questions is like, I need structure, right? I need mentorship. I need this. I need that. So what I told her is that, look, there are building blocks to knowledge, right? And the building blocks, basically, you start out with the basics. And, we are also partnered with a very large mortgage companies, publicly traded, that also that give us tools to give to our, whether you're a real estate agent or whether you're brand new to the loan business, whatever it is, as a newbie, right? We have their sources that we provide to you, right? We have Brad's blueprint, right? We have how many loan officers do we have now?
Around 60.
We have 60 loan officers that all network with each other. And that, basically, if I have a deal, where do I do? And everybody kind of comes together into one mind. Okay, we have resources. We have anything and everything you need to become successful and to train you and to provide you with the knowledge. And like I told my conversation yesterday with that agent is I said, you have me. I have, my God,
I think that's the key to it.
27 years of experience. And this is what I told her. I said, like you kind of mentioned earlier, like I've basically, like if you were to broad stroke, right, paint across them, I have a lot of experience. I've experienced in a lot of different, spaces within the mortgage business as a loan originator. Like I started as a broker, right? Spent time as a broker, spent time as a mortgage banker, right? Then went into retail, spent time in just like retail with branches, right?
Yeah.
Then spent time at private banking, right? Then spent time in entertainment. Then came back to, so I literally you
have a lot of experience.
It's a ton of experience.
And I
yeah.
want to unpack that, but I
Yeah.
want to come back to that because
Yeah.
what I want to do is kind of take this over the finish line real quick.
Yeah.
So if you're a real estate agent out there today, and we know that it's a struggle, there's not a lot of business, there's not a lot of inventory, there's not a lot of people wanting to get out of their 2 and 3% interest rates. Now you've got regulation, you've got these class action lawsuits, a decoupling of commissions. All these things are happening, and you're probably there worrying about, can you still stay in this business? Step one if you want to stay in the real estate game and still be able to do real estate, by the way, and sell real estate, but take mortgage and supplement it,
Yep.
you got to get your MLO endorsement.
Yep.
Right? You said that's 30 to 60 days.
Yep.
Step 2, go through some training. And like you just said, there are resources for that. We have national lenders that have training programs that are packed, filled from somebody who knows absolutely nothing, that in 5 weeks will get you up and running so that you know exactly what you're doing and how to speak the language. Then you've got to get with either a mentor or a branch manager that will be there with you side by side, talking with your clients, helping you structure loans, helping you price them, helping you do the disclosures, all those things that takes repetition to learn.
Yep.
If you do all of that and you take it seriously, within 6 months, you could have a separate career already going.
Oh, easily.
Easily. So I just wanted people to understand that, if you're out there and you're a real estate agent, that applies for maybe new LOs too. But if you're a real estate agent, it's not that big of a leap to go and get your MLO license, and you can have both. You can do real estate through one company, and you can do mortgage through another. And we're equipped to do that. And you're specifically equipped for it because you're not only a branch manager, but you also mentor people. And so that's why you've got these real estate agents that are on your team.
Yeah,
I just wanted to make sure that was clear.
I'll just want to say one last thing. It's just such low-hanging fruit. I mean, it really is. As a real estate agent, like, why wouldn't you want to do that?
Yeah.
And I'll just leave it there.
Yeah, perfect. All right. So you started to get into this where you started as a broker, then you moved into retail, you were with the bank, and then you got into private lending, and then you went into entertainment. So let's kind of compare and contrast where you are today, which you would consider yourself to be a broker and a banker, meaning you broker your loans, but you can also do them correspondent, which means we fund loans in our own name. You have the flexibility of doing either. Compared to when you were at the bank, and we'll just call it XYZ Bank. We don't have to necessarily say, if people know you, they know where you were, but we don't need to call them out.
Yeah, sure.
But what's the biggest difference? Like, there are a lot of bankers that are out there today that work for banks that get in this trap, right? I want you to talk a little bit about that and how you broke free and how you had one of your best years ever last year in your career when most people were failing.
Okay, so here again, I want to touch on one thing really quick because I think it's really important. If you started out, if you've always been in retail, your mindset is you're an employee. You know what I mean? Now here's the thing: because I was as a broker, I'm my own boss. I run my own ship, right? If I want to make X, I got to do whatever I got to do, right? In our world, again, you're your own boss. Okay, so to me, when I transitioned into that world, what I did see was a lot of people that were very content. Right? I'm just going to talk about kind of the personality, and then I'll go into more of like, well, how does it really differentiate being at a bank in terms of products, clientele, blah, 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 blah. If that's okay with you.
Good.
Okay. So it was kind of like a head scratcher because how they were just, they were clocking in, clocking out kind of thing, right? There was a responsibility because specifically at Bank X, my last bank, we cater to high net worth clients, again, like we talked about, entertainment, private banking clients, like, very wealthy people. So there always is a sense of urgency. You got to get stuff done, because, this client's got $10 million in the bank. If something, you got to get it done. There's a huge responsibility for it, but you step outside of that, then they're stuck into this mindset of this is it. You know what I mean? And coming from my past and going there and then leaving and trying to tell people, no, there's a different path. Okay, so the point being is that, if you're in retail right now, you're working for the man, right? If you want to do your own business and have a bazillion different options, well, okay. So yeah, to have options for your clients, because the bank has one sandbox, right? And if it fits, it fits. If it doesn't, it doesn't. And throughout the years, banks were able to do certain things for certain clients, and it would not be any kind of slap on the wrist, like federal, like, you're doing something wrong. But now there's more scrutiny on the banks, right? Now there's more eyeballs on what the banks can do, right? Where they're not violating certain acts, right?
Yeah.
Okay. So the banks have their set of products, they have their set of underwriting guidelines, and that's it. That's basically it. The broker world, my goodness, it is it's really like a shotgun approach. You can really just hit, and then hit something if you're looking
When you
for
worked
something.
for the bank, you told me that through the years there were times you couldn't do loans and you would refer them out to a broker.
Yeah.
And there are people every day that are doing that. I think you told me this morning that one of the people from the bank you worked at referred you somebody last night that they couldn't do. It's a $3.5 million loan. They couldn't do it.
Yeah.
And so, like you're saying, they have this buy box, and if it falls outside that buy box, you can't help.
Correct.
And so that's one of the limiting factors of working for a bank or what we call retail.
Yeah.
Whereas if you're a broker like we are, you have unlimited options,
It's really
but
unlimited.
it goes beyond that. If there's a loan that you find out has some trouble, or we call it hair on it, at some point along the way, and you can no longer move forward with that lender because of that problem, you have the ability to take that loan back, repackage it in a way where it qualifies for a different type of loan, send it somewhere else.
Correct. Yeah.
Banks don't have the ability to do that. So if you are a first-time buyer,
Yeah.
or a mover up, a second-time buyer, or looking to refinance or pull cash out, what would you recommend that person speak with if they're going to look for a lender to work with and help them?
I'd say if you're considering joining the AmeriFund team, it's a really good idea.
We as processors at AmeriFund Home Loans support the loan officers in every aspect of the loan once it comes into processing because we want them out there marketing themselves and originating more loans and supporting more borrowers.
Competitive commission plans are a given, and powerful technology is expected, but what truly sets us apart is our culture. We've built a solid support system for our loan officers.
If you're interested in joining the AmeriFund team, go to amerifund.com/careers.
If they're going to look for a lender to work with and help them.
Like specifically, if you want to talk about first-time home buyer.
Yeah, let's talk about.
Okay.
Let me re-ask.
Sure.
So, if you're a first-time home buyer, who would you recommend that they speak with to get their first loan?
It would definitely be a mortgage broker.
And why?
The mortgage broker has, again, there's so many different options for first-time home buyers where the banks don't have that. And let me I'll give you several examples. We have a 1% down payment, no MI options. We have deep down payment assistance programs. We have the ability on debt to income ratios on certain products that the banks will put, nope, can't exceed this, right? Where we have the flexibility to go above that, right? Right, because the banks will have their what we call an overlay, right? Okay, so Fannie and Freddie is the Bible of the guidelines for all lenders, and then banks tend to put their guidelines on top of their layer it because of the risk.
More restrictive.
There's much more exactly more restrictive. So the other thing. To your point that you were making, if it doesn't fit with this lender, we can take it in, right? Okay, so for example, we can do a first-time home buyer FHA loan program to like a 500 credit score. I mean, you're gonna walk into Chase? No way, absolutely not, right? We do, right? So there is just so many more options that we could give to the client, right? And educate them on it. And we tell them like, here, this is what you're going to get here. And here's the list of stuff and the options that I can be able to provide you.
Yeah. So you mentioned that we have a lot of different products. Of course, banks don't. One of those products is non-QM. And in the non-QM arena, we have something called a DSCR loan. What does that stand for?
Debt service coverage ratio.
And what does that loan do?
It's literally my favorite loan. It is my favorite loan. For investors, whether you're buying or refinancing, and you do not have to be a person that has a ton of history. You can be a first-time investor and use this product, right? So the loan application is no income, no employment. It's literally almost blank. It's your credit liabilities, and then maybe some assets if you're buying whatever. But the easiest way to qualify for this program is you're going to compare what the PITI, right, the payment on the subject property, and you're going to compare it to what it's going to rent for, what is rented for, right? Your sweet spot is a 1-to-1 ratio, right? So my housing expense, taxes, insurance, principal and interest is $2,000. I can rent the house for $2,000. Bang, loan is done. That's it. Now,
got it. So let me just clarify for those that are listening. So you're looking to buy something, and what kind of down payment is required on a DSCR loan?
Typically 20% down. Sometimes we can get away with 15% down, depending on the investment.
So let's just say 20% down.
Yeah.
You take that loan amount, you calculate based on the interest rate what the principal and interest payment is. That's your loan payment. You add your taxes and insurance. You come up with a monthly payment that covers all four of those items: principal, interest, taxes, insurance.
Correct.
You get a rental survey that says you can rent the property out for this amount. So the appraiser provides that.
Yep.
And if it's 1-to-1, if the payment in whole, no vacancy factor, covers the payment on the mortgage, if the payment from the renter covers the payment on the mortgage, the loan's done.
The loan's done.
Okay.
So you just really need an appraisal.
What if it doesn't? What if it doesn't cover it?
You can actually go down. Several of our investors will let you go down to a 0.75, and you can still do the deal. So that is, by the way, like if you really think about it, like they know you're not going to cash flow. You know what I mean? I mean, they're looking at it and saying, well, if it's not 1-to-1 is that you're breaking even. If you can obviously, if the rent is $1 more, you're cash flowing $1. But now if you're under $200-$300 and you're at a 75 ratio, we can still do it.
Why? Why do they approve those?
That's a good question.
Do you think it's because of the tax benefits?
So tax benefits, definitely. There's also there's still skin in the game for the client. You know what I mean? Like, it's not like I'm going 100% loan to value, right?
They have 20%.
Yeah, they've got skin in the game, right? Now, it could also be that maybe the property needs a little TLC on it, right? Maybe they're looking at it and saying, okay, well, right now, it might be this, right? But if you do X, Y, Z the property, you can collect more
rent.
Yeah.
Yeah. So look, I mean, going back into history before the crash in 2007 and 8.
This is not a subprime loan.
But before that, for decades, we did loans as stated income. This is before all the crazy loans in the early 2000s. Companies or banks like World Savings or Coast Federal Savings, that were both around back then, did many, many loans, 20% down, stated income. And there was the skin in the game that not only qualified them, but made them performing assets.
Right.
These had very high levels of performance in up and down markets because of the 20% down payment and then having good credit. So fast forward to today, you're saying that the DSCR loan, which is designed for investors buying rental properties, is the same way, that the 20% down gives enough skin in the game that nobody wants to walk away from it. So they're going to figure it out, even if they might have a 25% loss each month on the payment. They're going to continue to make that payment because they've got so much invested.
Absolutely.
Got it.
Yeah. I mean, again, it's not going back to the days where we were doing the stated income, stated assets, stated this, stated that, and we're at 95 or 100% loan to value.
Yeah.
That's a failing product.
Yeah.
Yeah.
Awesome. Well, hey, what other, like you came from, like you mentioned, you came through from the private bank and entertainment. You were doing big loans.
Yeah.
And if I remember correctly, before you joined us, you had some pretty outstanding years where you were doing 120, 130, 140 million dollars of volume each year. And now you know that market's kind of drying up. It's the banks aren't doing as many of those. They're certainly not making exceptions, so their buy box is smaller. So you're starting to get some of those same loans.
Yeah.
But on the broker side.
Yes.
Talk to us about how you're doing the loans that the bank isn't doing. What that looks like.
Okay, so let's go back to the non-QM world, right? Okay, so a lot of the let's talk specifically self-employed, right? Like for the most part, your A-listers, your Hollywood, A type, they're going to qualify they're going to show their tax returns, whatever, right? Now you got somebody more of, hey, I'm just starting out, right? And I don't really have a history. Okay, well, let me take a step back because I'm putting two clients into one box. So I'm saying self-employed as private banking. I'm saying self-employed in terms of entertainment. Self-employed in terms of entertainment could be somebody that's a writer, right? Or somebody, you know what I mean?
In front or behind the camera.
Exactly.
So let's start with the entertainment world. So in front or behind the camera.
Yeah.
And let's talk about in front of the camera. Big actors, actresses, you've done them.
Yes.
Big names that people would have heard of. Do they really show their tax returns?
Yes, they have to show their tax returns. It's depressing, by the way, when you see some of those tax returns as a loan officer. But it is the same way. As a first-time home buyer and as a Hollywood A-lister, you're not getting around ATR. That's ability to repay.
So you still have to document all your income, no matter how complex it is.
Absolutely.
Okay.
Yeah.
All right. So that's good because a lot of people don't know that.
Yeah.
So if they're having to do that for the bank, then you're not coming in saying, provide me something the bank's not asking for because they're doing a signature loan and they just like you and they've heard of you. So they have to do the exact same thing, but you have a lot more flexibility now than you had then.
Yeah, absolutely. And going back to the referral that I got yesterday from one of the bankers that I used to work with, this person is in the private banking world. He's a high-end attorney, and so his loan is coming due, and he can't qualify. As an attorney, you're up and down, right? You're closing big cases, and now sometimes you're working on. So you're going to have these up and down years, and it could be these years where it's 2 years, and then bang, you make $10 million on a big case, whatever it is. So. He's going in to refinance his current loan, right? The loan to value is like 50%. The house is worth about $6 million. The guy's got a bunch of money in the bank with the bank. Long-term relationship. They know him. Can't give him the loan. Cannot get around ATR. So they call me.
Yeah.
I can get around ATR because non-qualified mortgages do not play on the same field as Fannie and Freddie. It's a different investor. So how do we get these loans done, right? There are bank statement loans, right?
Just showing cash flow.
Just showing cash flow. Just show me your deposits. And then also I can layer that with other things. So let's just say he had a down year, but through his S corp, he still W-2'd himself, say $100,000, for example, whatever it is, right? But that's still not enough to qualify for a $3.5 million loan, right? You need much more than that. But if I have deposits, I can use deposits. I can bring in other things to make the income work to qualify them, right? The bank statement loans are what has been recently with the clients that cannot qualify on traditional documentation, tax returns. is utilizing their bank statements. Okay, actually, we have somebody going into escrow who works for the studios. He's having he's moving from California to Texas. He's had his up and down year. And now he's going to Texas and well, what are we doing with this income and how are we going to show we're going from California to Texas, blah, 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 blah. He sends me the pay stubs. We're all over the place. I said, send me your your personal bank statements.
Okay.
You don't have to be self-employed. This is to my point. So the bank statement programs, you can be self-employed or you could be a W-2 person.
Okay.
So now, what am I going to look at? I'm going back 12 months, right? And I average out his deposits, right? Because he's getting direct deposit. Bang, 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 right? So I'm using that. That gives me my income. I'm not looking at his pay stub today. That doesn't make any sense. I'm going back 12 months and going, boom, here's your income. You're ready to go.
So that's a great example of a type of loan that gets somebody who really does qualify, who really can afford the payments, a loan that a bank wouldn't give him.
No. Yeah.
Give us an idea of the interest rate on a loan like that today.
Today, you're low sevens. So you're maybe a quarter, 3/8, depending on your credit score also. That's a thing too when people always ask what's the interest rate?
Assume
blah,
a great
let's
credit
just
score.
let's just say worst case scenario, maybe a half higher.
Okay.
Maybe.
Then standard mortgages.
Still
30-year fixed.
Still 30-year
Still
fixed.
no prepayment penalty.
No prepayment penalty.
Yeah.
It's owner occupied.
Great
You can't
loan.
it's a great loan.
Yeah.
And here's the thing too, is that these loans, this is not a permanent tattoo on you, right?
You can always refinance later.
Well, of course you're gonna we're right, because this is your situation in today, right?
Yeah.
In the past, you weren't in this situation. In the future, you might not be in this situation. Let's just get you into the house, right? Or let's just get you out of whatever current situation that you are in, right? And then let's revisit it 6 months from now, or maybe a year at the most. And if a year, maybe going into next year's filing, hey, then we're in a completely different conversation.
Yep. All right. So let's change gears for a second.
Yeah.
Let's talk about, so we've talked about bank versus broker, the flexibility you've got on the broker side. We've talked about real estate agents getting into the mortgage business to supplement their income, maybe even take over their income. We've talked about new loan officers breaking into the business. It's all really good stuff, right? But let's concentrate on buyers. Let's concentrate on buyers that have really gotten to the point where it feels unaffordable. The high interest rates, property values are still very high. There are very few areas in the nation where property values are starting to decline. There's some in Florida, but locally here, they haven't really declined.
Yeah.
They've stabilized. So if you're a young person, if you're starting out with your family, if you got maybe dual income now, you just got married, having your first kids, where do you start? Like, how do you actually buy your first home?
Yeah.
Is it something where you need to look at maybe a duplex, a triplex, or a quad and get some rental income from those properties to help to cover it so that you can afford to get into that first home?
I mean,
give us an idea of what you would recommend.
I mean, what I recommend really, it's
My advice for someone selling their home: number 1, do it yourself and save. Number 2, use HomePie.
HomePie makes it easy to buy or sell without an agent. I can list a home in minutes and start receiving offers right away from buyers.
When we discovered that we didn't have to lose $40,000 in agent commission just to upsize to a larger home, it was an obvious choice.
List your home for free at homepie.com. Keep your piece of the pie.
It's having first-time home buyers. And again, my brain always goes back to, I'm helping somebody with this right now.
Okay, good.
So,
tell us that story.
Okay, here's the story. Well, actually, we helped them get into the house about 6-7 months ago, and now we're helping them reduce their payment. And I can talk to you about that.
Perfect story.
Okay.
How did you get them into it, and what do you?
Okay, so you have to have the conversation of what. Well, even if you got this dual income, right? When we look at gross, right? So the conversation before taxes, exactly. And it's to say, well, like, it's just the easiest question on, what can you afford, right? And then how do we get you into this home where the payment is going to be exponentially higher if your down payment, right? Because the down payment is going to have a huge factor, right? If you're going 3.5% down on an FHA loan, or maybe how do we get you maybe to 10% down, right? So we have a, we look and say, like, myself, I'll say, okay, well, guys, you have a 401k. By the way, you can use the funds from your 401k as a form of a down payment, and you're not going to get dinged on it. Okay. So again, we looked at 3.5% down. Mom and dad are still helping basically a lot of these first-time home buyers. That's a huge source. But still, when you're looking at, years ago, 500,000 was your, maybe your entry level, and now it's $1 million. That down payment, boy, it's a lot higher. And boy, is it a lot harder to save for $700,000, $800,000, $900,000, $1 million than if he was to save for $300,000, $400,000, $500,000, right? Anyways, so that conversation, that story was looking at their situation and saying, hey, I can, we can use your 401k and we can get you into a more affordable payment, right? So it's talking to them. What are your options?
So is that what you did with this couple that you're refinancing now?
Yeah, and here's what they had a baby too, and mom lives also with them, and I'm looking at their pay stubs, and I'm like, wait a second, you guys are claiming zero. You own your home, you have a baby, and you have mom. Okay. You're claiming zero on as dependents, right? There's another form of way where we're going to help you refinance, and I can get into a little bit of specifics for that because I think it's a really powerful for anybody that's listening to this that bought within the last 2 years that is carrying mortgage insurance and they put maybe 10% down or 5% down. There's a strategy to get rid of that mortgage insurance and lower your payment, right? So we can get into that, but what I was looking at is taking that and then saying, if you have a conversation with your CPA and HR, but here is a strategy. You're claiming zero, meaning that your paycheck, Uncle Sam is going, thank you first, here's the remainder. Now, when you're claiming 3, 4, 5 dependents because you're a family, you have a child, you have your home, you have your, you can claim more in exemptions and you keep more of your paycheck, right? Now, as you keep more of your paycheck, you're bringing in more money, obviously, right? So that's another form of cash flow, right? If I'm keeping more from and then I'm also helping you save $500 a month. Now we're talking, $800. I mean, it could be $1,000. It could be $200 to $300 per paycheck for the husband and for the wife.
Right. So okay. If you're a first-time home buyer, this step one is to connect with a mortgage broker.
You gotta,
and there's a lot of reasons for that because your mortgage broker is going to be motivated to get you a loan. Why? Because they paid 100% commission. They don't get any base salary.
Yeah.
And they don't get paid if they don't fund your loan. And so if you're a first-time home buyer, you want to get with a mortgage broker right away when you're thinking about buying a home because they're going to figure out a way to get you a loan and they're going to give you options. If one of those options works and you go through the exercise and you compare them and you make a decision, yes, is the way I want to go. My parents are going to help me with a down payment, or I'm going to do a 3.5% down. Maybe I'm a veteran. I'm going to do 0% down. Whatever the loan is.
Yeah.
They're going to be motivated to get you pre-approved on that, get you in the hands with a real estate agent to start looking at properties. That is really step one and step two.
Yes.
Right?
So, step one, step two. And then just to your point, again, like I'm running my own business, right? Like I don't, my business survives off of referrals and my business survives off of the referrals comes from giving you unbelievable service and educating you, right? So, I'm not compared to maybe a retail bank where
that's why I'm saying
you're not so motivated.
The very first thing to do is talk to a mortgage broker.
Yep.
So now you've got your pre-approval, you get with a real estate agent, you find a property, you start writing offers on the property, and lo and behold, one gets accepted.
Yes.
What are the steps from that point to getting you closed?
So, if you're working with me, right? Okay, we've covered a lot of this stuff up front, right? I've educated you on how the loan is going to work. I've educated you on what your loan program is, what your rate and payment is going to be depending on when we lock your loan, right? I've educated you on what to expect as the coming in for the cash to close, because you're going to have closing costs depending if you write something maybe with a seller credit or not. You're there, right? So you know all of this stuff up front, and you're ahead of the game. So when your offer gets accepted, there's not a lot of what now, right? So okay, your offer gets accepted. You're gonna work with your real estate agent. You're gonna first start off with your home inspection. Then once the home inspection, you get a thumbs up on it, we're ordering the appraisal, or maybe your realtor's like, hey, this property looks good, or I know it. I've sold it in the past. Whatever it is, go ahead and order the appraisal, depending on the time frame of the escrow. Also, appraisal comes in. Your loan is submitted. I've already done your pre-approval. Once your offer is approved, I get the purchase contract. Your loan goes directly into underwriting, and then within 1 to 2 days, max, typically 1 day turnaround time, your loan is completely underwritten, right, by an underwriter who's checking everything off that Shadi's already checked off, right, and basically giving them the stamp of the approval on the loan approval, right. And if the underwriter wants anything else here and there, maybe an updated pay stub, bank statement, whatever, stuff like that, we're collecting that information. Appraisal comes in, appraisal gets signed off, and we're ready for closing. I mean, it's
Signing
really
closing documents.
Yeah.
So, what are points, and why would somebody choose to pay points on a mortgage?
Yeah. So points, you're basically prepaying your interest up front, right? So, in this market, we've had a lot of conversations about, well, should I pay points, right? Because, we've gone through the high interest rate. Like we're in a trend, we're in a different kind of trend in terms of interest rates, right? Maybe, we've seen the peak, and now we're kind of seeing a little bit of the down, stable, a little bit down, stable, whatever it is, right? We're not seeing this, we're slowly down. So the conversation is to the client, well, do you want to spend, let's just say it's a $500,000 loan. Do you want to spend $5,000 now and save, again, I'm just using hypothetical numbers, $150 a month, right? And what is that 150 times 12, right? And then, or what is that break even point? When do we think that rates might be able to come down where we're looking at refinancing your loan, right? So that's a conversation where I have with my clients, and I'm kind of thinking like, maybe you don't do that right now.
So points are upfront interest that you pay.
You're paying your interest upfront. You're
lowering
to get a lower
rate. Interest rate.
Yeah.
And then you got to weigh whether the benefit of paying the upfront interest at a discount to get the lower rate is worth it based on how long it would take you with the recovery.
Correct.
That monthly savings, how long it would take to add that up to equate to the amount that you paid down.
Exactly.
Okay.
So if I'm going to save X by paying down my rate, what is that going to look like in the long run? Because is Shadi going to be calling me in a shorter period of time and saying, guess what?
Right. Because if rates come down, let's say 12 months from now, and you haven't recovered that money that you paid for your points, you've just wasted money, right?
Yeah, essentially.
Okay. Wouldn't another reason for paying points be to qualify for the loan?
Yes.
And let's say that somebody doesn't have the money. They need to get the lower interest rate to qualify, but they don't have the money to pay those points. Where would they get it from?
I think you would utilize it maybe, well, okay, in terms of qualifying, it's you're asking a seller credit for that.
You'd
right?
ask the seller through
you
your
ask
offer.
the seller to absolutely.
So that comes in during the pre-approval process
Absolutely.
when you're coordinating with the real estate agent on what's needed, right?
Yeah, the interest rate is a huge factor that plays into the debt to income ratio with the payment, right?
Right.
Because if they want to be at a certain loan amount or purchase price, and if that rate is hinging on maybe rates have gone up, now we need to get that rate down to get you pre-approved, then hey, Mr. or Mrs. Real Estate Agent, we're going to need seller concessions to get this rate down.
Right.
And here's a dollar amount.
Yep, there you go. Now, what I find is kind of interesting because we've gotten into this environment with the changes in real estate and the decoupling of commissions, and I'll explain what that is for our audience. But basically, there's been a big change in selling real estate. Sellers now only contract for the fee that they are going to pay to a real estate agent to sell their home. The buyer has to contract with the buyer's agent the fee they're going to pay them to represent them.
Yeah.
Now, that could be a lot of money. If you're buying a $500,000 home and your agent, as your buyer, wants 3%, that's $15,000. You may not have that money. So alternatively, you can go to a seller when you write your offer and say, hey, I want you to also pay my buyer's agent the $15,000. A seller's going to look at that and think, if I need to do this so that you could buy my house, I'm going to need a higher purchase price. So that will help them to offset it.
Right.
But let's say then you also need them to pay points to lower your interest rate. You may be asking them for 4 or 5%, which may not be palatable, and they may not be able to raise that sales price up enough based on the market and what their house is worth to cover it. So the reason I bring that up ties us back to what we talked about before. If you're a real estate agent, you're starting to run into these issues where you're asking for the seller to pay so much in concessions they can't afford it. Think about getting into the mortgage business.
Exactly.
And then you don't have to charge so much.
Right.
As a buyer's agent, maybe you charge 1%, but then you're making money on the mortgage too. Just something to think about, food for thought.
Absolutely.
There's ways to be creative here.
Yeah.
You're still doing the work as an agent. You still should get paid. But
Yeah.
how do you make it affordable for everybody? So just trying to bring it all home there.
No, I love it. It's a great point. Again, that's why I tell these guys, you're literally like low-hanging fruit. Like,
It really is.
Why shouldn't you be doing this?
Awesome, man.
Yeah.
Well, hey, it's been really cool. Finally.
Yeah,
doing
man,
this
it's
with
been
you.
really fun. Okay, so if you need me again, you know.
If somebody's listening to this
Yeah.
and they want to reach Shadi, they're interested in a loan, or they're a real estate agent and they want to get on your team, they want to learn the mortgage business, how do they reach you?
So you can go onto the AmeriFund website, and under contacts you can find me and my contact information. You can email me at Shadi, SHADI .Sawalha, SAWALHA @amerifund.com, or you can call me on my cell, 805.
Give your number.
857-9706.
All right. Awesome, man.
Yeah.
Well, thanks for joining me today.
Yeah, it was fun, Brad. I like
and
it.
if you guys got value out of this, as always, I ask that you like, share, follow, subscribe. We'll keep bringing it to you. We're going to bring you the value. We're going to bring you the blueprint. Today you found out how to apply for a loan, the steps to go through, how to get your real estate license. Come back next time for more information. Thanks for joining us.